In this video, I'm going to show you exactly what I would do over a 30-day period if I had to start my trading career from scratch. When I first started learning trading 8 years ago, I learned everything from trial and error, so I'm completely self-taught, which gave me a lot of unique perspective in years of time of my life that I didn't need to spend, which ultimately burned through a lot of my own money that, had I have known what I'm about to show to you today, would have saved me years of wasted time. So whether you have some trading experience or you're starting completely from zero, my goal of this video is to create a boiled down checklist of the most critical things that you should focus on. I'm going to share with you customized trading tools that I've built over the years. Then we'll talk about how to access capital starting with a small amount of money so that once you have your model, you're still able to make large profits without having to use a ton of your own money, and how to effectively scale this up to your trading income goals. So if you make it to the end of the video, you'll have all of these resources and a clear path to follow to start your trading career without wasting unnecessary time and money. Okay, so the first thing that I want to cover is what specifically to focus on as a beginner trader or someone who's looking to revamp their current trading process. Okay, and in order to know what we should be focusing on, we need to know what not to focus on and what mistakes to avoid that can leave you in this sort of barren graveyard, not making progress, being stuck at the same point, and spend years of time losing money, being confused, and ultimately quitting. Okay, there's one simple thing that you can do to sidestep that entire process and make sure that you're not making this mistake. And this is a mistake that I see almost every single person making and that I personally made in the beginning of my trading career. And if you fall into this trap, this will completely halt any progress that you're making and keep you stuck where you are. This is probably the biggest aha moment foundation that you need to know as a trader. Okay, so the first thing that people are doing usually when they're getting started with trading is finding some sort of pattern to follow or idea and immediately taking money and putting it onto an exchange to try trading that pattern. All right, so oftentimes what will happen in this process is because you're unaware of the risk implications, you're actually able to be braver than most traders, which will allow you to take positions. You'll probably start to make some money off trading and think, oh, this is amazing. I should keep doing the same process, but with larger and larger amounts of money. And this is the psychological phenomenon around beginner's luck. Because you're not overthinking about all these things, you're actually able to see more success than people with more experience, which is essentially the premise around beginner's luck. Okay, so phase 2 of this mistake is you'll continue this process and then eventually you'll run into a position where you start to take a massive loss and you look and say, I'm down so much money, I can't sell because I don't want to lose this amount of money. The trade will most likely reverse, maybe go back up to your original entry, then you'll take it off the table maybe for a small win, and you'll reinforce this ideology that if you just hold through losing trades, you'll eventually be able to make money off of it. You don't have to realize a loss, and if you just hold through this, you'll just end up making money. Okay, the third phase of this mistake is you follow that same exact ideology to hold through the loss, but instead of turning around, the trade continues to move aggressively, and eventually the loss gets so bad that you're forced to close the trade, and it takes a massive chunk of money out of your account, which leads to the fourth phase of the mistake, which is thinking that you now need to go learn a bunch of things and acquire all sorts of information to prevent yourself from ever losing again. And this is usually the area where 90% of the traders will just stay in, never progress out of, because there's a fundamental flaw in logic. Okay, this is the part that you really need to understand, where you need to rewire the way that you think as a trader. Okay, I say this all the time. The normal human instincts and attributes that will typically make people successful, if applied to trading, will actually do the exact opposite. Okay, this is going to start to make more sense to you as we make it through this video, but just understand that you're going to need to rewire the way you think and the way 99% of people think in order to be successful at trading. And so part of this mental rewiring is understanding that trading essentially boils down to a pretty simple math equation. There's a lot of things that end up applying to this equation, but starting off here, it's probably one of the most critical things that I wish I started with instead of chasing money or chasing profits, is that the only thing that really matters basically in any trading strategy are two metrics, which is your winning percentage. So what percentage of the time are you right versus wrong? And when you are right versus wrong, how much money are you making when you're right versus how much are you losing when you're wrong? Okay, so in order for me to explain how this works, I'm first going to show it to you on a calculator. Then I'm going to show you a real trade example. And then I'm going to show you how it applies on a chart in sort of a more digestible trade example. Okay, so say for example, we're starting with $500 in our account and we're going to calculate this, say, over 50 trades. Say we're risking 2% of our account. And so when we lose that 2%. And when we're making 3x that amount, so we're making 6%. And say we're right about that 35% of the time. So if we calculate this out, we can see starting with $500 over the course of 50 trades, risking 2%, being wrong 65% of the time, our ending balance ended up being $748 with a high account value at $844. So the total total return on investment per trade was about 0.88. Okay, so the total return on this process was about 50% over 50 trades, being wrong 65% of the time. So this is sort of the first process of rewiring your mind and understanding that trading has nothing to do about being right or wrong on any individual given trade. It has everything to do with these two numbers in finding combinations on the chart that is going to allow you to exploit this formula. Okay, so let's look on a charting perspective to really understand how this would work. So, and you can scale this in all different ways too. I'm going to show you with really conservative models, and I'm going to show you how to quickly and effectively scale this depending on how fast you can do this or how good your process is. This is all part of the personal development of trading, but you can actually scale your account really, really quickly with what I'm going to show you. But say, for example, we're starting with the $500 and we want to find out what 2% of that is, which is going to be $10. That means that if we can expect for this level to be reached before this level to be reached, that's going to give us, as we can see right here, 1-to-3 risk reward ratio. And that we want this area right here, which is going to be our entry zone, and then the area where we're going to leave the trade for a contained uniform loss, to equal that 2%, which in this case is going to be $10. So in the trading world, we're going to consider this, regardless of the dollar amount, a -1 unit of risk. So risk factors or units of risk are basically going to be whatever your percentage or fixed dollar amount is from your entry level down to your stop loss. Okay, and once again, this is super important to understand because in normal everyday life, if you tell people you're trading, or in general, whenever you're wrong and you lose money, these are typically considered in regular society behaviors that need to be modified or changed in order to prevent yourself from being wrong or prevent yourself from losing money. But what I'm always reinforcing, especially to our premium trading members, is the fact that the money that you put on for risk is simply opportunity cost to be able to enter the market in a position where this outcome can play out. Okay, and another important thing to remember is if we look at our return curve graph, starting with $500, there's going to be periods where we lose 4 consecutive trades, win a trade, lose a trade, win 2, lose 2. Okay, 1, 2, 3, 4 losses in a row with a win, 1, 2 losses in a row. Even places here were 1, 2, 3, 4, 5, 6 losses in a row. So a lot of people going into trading look and say, okay, well, if I can make 1 to 3 and on average that I should be able to make 2 trades per day times, in this case, is $30 per trade. So if your goal would be to take 2 trades a day, you know you can make 1 to 3. That would mean that you made a total of $60 per trading session. But the problem is if you set those daily goals, there's going to be periods of time like we've seen here where you're going to lose 1, 2, 3, 4, 5, 6 trades in a row that over the course of 3 days, you're just taking loss after loss after loss. And normally what people do if they have these daily profit goals is they're going to start to try to increase their position or take more trades than they should or force trades that are bad in order to try to catch up to that daily goal. So what I'm always going to urge you to do as a beginner trader, and this is something that I wish I started with, is always base things off of process-based goals that are going to ultimately lead you to where you want to go. For each day, you're basically focusing on how effectively you followed your process. And more towards the end of the video, I'm going to show you how you can use this to set your starting amount, but understanding that you shouldn't be focusing on the money per day. You should be focusing on executing your process, because the more closely you can do that, the goal is generating a process with a small amount of money so that you can take this exact framework and inject more capital into it to be able to scale up your account like crazy. So for example, say we got a little bit better with our trading and we got up to a 45% win rate, right? Even starting with $500, I'm going to show you a little bit into the video how we can use up to $50,000. And so once you have that process dialed in, you can essentially start with $500, use up to $50,000 worth of capital. And now say you're risking 1% of that total amount. Over the course of 50 trades, your balance is now $75,000, which would be $25,000 in profit divided over 50 trades, which would come out to about $500 in profit per trade. And if you're able to take 2 in a day, can bring you up to generating $1,000 in profit in a single trading session. And this is exactly what I deployed when I set up all of my trading systems to be able to learn them in a model and then inject a larger amount of capital into them, which now allows me to be able to make $3,000-$4,000 in a single day of trading on a routine basis. I have tons of videos where I show you how I do this on a daily process. Okay, I'll add a playlist right here if you want to watch some of those videos after. Okay, so I really can't emphasize enough, it's about mastering a small process and then being able to scale it. Trading is one of the only businesses where you can have 100% proof of concept, test out your business model, model before you add money to it. And then all you have to do as a trader is be able to execute the things that you've learned that fall into this formula in order to be able to make money. Any other business model, there's so many outside variables that you can't control. This is partially the reason why I fell in love with trading in the first place. So let's take a look at a chart example, and I'm going to share with you how you can position size so that you can always have a uniform amount of risk. Okay, so there's a bunch of ways you can do this. I'm going to first show you with this tool over here, and then I'm going to show you a cool custom tool that I'll give to you at the end of this video if you want to add it. That can speed up this process along the way. So I'll show you a few trade examples and how this sort of pertains to our winning percentage and average risk reward over here. Okay, so I'm charting on TradingView here. Okay, this is what 99% of people who are trading are going to use. Okay, I do have a referral link in the description if you want to join TradingView. All right, so our main goal is to find situations in the market by using indicators and other processes on the chart to anticipate where there could be areas where the price is going to make major changes in direction, which is going to allow us to set up risk and then hopefully make more money than we're risking. Okay, so this is one trading strategy that we use that uses market structure. So I'm basically counting waves, waiting for this zone to be roughly hit. Okay, so if we play this chart forward, you can see the final wave is created, comes up and moves through that zone. Don't worry if this isn't going to make sense. I have tons more videos explaining how all these indicators work, but I just wanted to show you the general premise of how we design this. Okay, so now I have price starting to move down. This is creating what we call an ABC structure. Okay, so I know from this being a new break of trend and this sort of structure being hit into this Fibonacci projection zone, that if I were to take what's called a Fibonacci retracement from this high down to this low point, I can target this 61.8 level here. Okay, set up my risk so that I know if the price wants to move this general area, this is going to be the zone that I now want to keep as one risk factor, which is now going to be that 2% of my account. So if my entry price is 153.16, target is 153.41 right here, and my stop loss value is 153.41, this is automatically going to give me the exact amount of units that I need to enter my position in to have a corresponding dollar amount of risk. So if I want to risk, say for example, $100 on this trade, I'll need to enter with 400 units with an expectancy to make $300. Okay, so in this situation, the price would come up. So it's a little bit higher for this example, but I would enter in with 400 units. And then the price would play down our take profit for $348. So you're always at first measuring your risk and having that be a contained amount of money. So for another example, we look at this current trend right here. We got 1, 2, 3, 4, 5 response levels, fifth wave structure at 3.618, fib retracement off of here. Okay, take profit set up. Okay, we input our orders, 151.24, target 152.17, stop loss 150.93. So if we wanted to risk $100 in this situation, we would have to enter with 322. Okay, so we would set up our order, we would have gotten in right there, and the price would move up to our take profit zone, where once again, we're able to contain our losses here, calculate that, and then if we get the reversal, we're using calculations to always keep the amount of risk uniform. And the reason it's so important to use this calculator is because say for example, you wanted to buy in here and you say, okay, I'll just buy in with 400 units here, but now we're losing 2 times the amount that we want to risk. Okay, so now in this total situation, our risk is completely changed, which is going to change the entire statistical outcome of our model. And if you're trading like this or with random amounts or with a random process, it's going to be impossible for you to maintain any level of consistency. Okay, so I want to show you another trade example here with different numbers on the trade calculator to really show you that you can make sort of any combination of winning percentage and risk reward that will fit into a model that you develop to be able to scale your account. Okay, so say for example, you were starting with $2,500 and you're risking 20% of your account over 50 trades. And now this time your risk reward is 0.22, but you're able to get your winning percentage up to something like 93. Okay, you can see starting with the $2,500 over 50 trades, your trade balance can be $9,600 and you can have a 286% account return. Okay, if you look at some of the students that have gone through our entire training and have joined our private trading team, okay, I'm not making this stuff up. Ned Narb saying, check this out, 108% account growth in 6 days. Levy taking $1,600 and turning it into $7,000. I'm currently on a 32 trade win streak. I'm hoping for it to end because it's screwing with my mind. Okay, but off of this, I'm able to generate sometimes $3,000, $4,000 in a single trading session. Okay, in this tool, in this calculator, I'll give to you guys at the end of this video in all the tools that I'll give to you. You can watch other videos to know a little bit more about the details, but basically in this type of situation, if we have our entry level right here, here, we would once again select long onto this calculator, put our account size in, have our entry equal our limit, take profit up to this zone, stop loss would be this value, and then we set our limit 1 and limit 2. And that's going to show us how many quantities to add at each level to be able to allow this process to unfold. Okay, and you can see in the real recording of this trade, I made over $1,200 in about 45 minutes. All right, so now let's talk about actually getting into the position and talk about access to capital. Let's go back to our Solana example here where we got a nice 1 to 3 risk reward trade. Notice how we entered with 322 units for a expected profit of $300, putting $100 of risk on the table, which is relatively normal. However, in order to do this, we would have to have 322 units at $151 per unit, which would be a capital requirement on the position of about $48,000. Now, unless you have $48,000 sitting in your account in order to risk $100 on a trade, this trade would not be feasible. And this is why there's access to leverage exchanges and also now prop firms, which will basically allow you to take larger size positions, give you that access to capital, and it's really not changing anything about the risk profile on the trade. Getting into trading, a lot of people think leverage you either use in order to be able to risk more amounts of money or that it inherently brings more risk to the table, whereas that's really not the case at all. So for example, if we wanted to take this trade, okay, I can go over to Bybit here, which is one of the ways that I trade cryptocurrency. Okay, depending on where you live, there's other options. Okay, and the same thing is basically true with prop firms. Okay, there's something called leverage capability. All right, so if we input 151.24, which is our entry times 322 units, you'll see this is going to cost us that $48,000. But now I can click and go up to say something like 50x leverage, hit submit, and now the capital requirement for that same exact trade is now only going to be $1,000 of my own money. So the only thing that leverage is really changing is the amount of capital that you have to put into the trade. As long as you're calculating your risk with how much you're comfortable with losing, you can use leverage to be able to risk the amount of money that you want on each trade, even if normally it would take a large amount of capital to enter. Okay, another way that you can quickly calculate your unit amount is with our on-screen custom indicator. Okay, this is in the tools that I'm going to give to you at the end of the video, but basically you can click on your Trade position size calculator. You'll notice at the bottom of trading view, it's going to prompt you to click at your entry price, click where your take profit is and where your stop loss is going to be, type in the dollar amount you want to risk and hit apply. And now it's going to show you the exact amount of units that you need to enter with, the risk reward, the expected profit, and the risk on the trade. Once again, giving us that 322 units of risk. Now, in order for us to figure out how much money to start risking based on our goals and our trading strategy, we first need to actually understand how trading whatever model we're looking into, which is going to bring us into the process of testing the system. Okay, so I've actually created a custom journal for you guys. It allows you to log all of your trade information here and then view it in gallery modes, have different views of it, and also have a checklist of things to do depending on your system that you can customize to your own liking and be able to track your data over time. Okay, but before you put any money into the market, what you should be doing is using this bar replay tool here on TradingView, where you can go back in time, select a random candle, and just like we did over here, be able to play your strategies forward and test this over, say, 30 or 40 trades to see, following the strategy, how much money you would end up making. Okay, so once you open this up, you can go over into each column here. When you wanted to add a new trade, you just click that. You can click on the day of the week. You can add all sorts of different pairs. Say you're trading a different pair, you can click on that and add that in there. Okay, you can add the strategy type that you're following, the time frame. Okay, if you want to add any more information, you can click on this and you can add either numbers, checkboxes, pictures, anything that you really want. This is going to allow you to look at your winning percentage here and the total amount of profit or loss that you had over that duration of time. So in this situation, if we just took this trade, we knew we made $300. We would capture this screenshot. I would click on this part right here, drag my screenshot like this, and then you'll notice as I go over into my gallery view, I'll be able to have a look at the exact trade that I took. Okay, you can select whether you're looking at your losses or your wins, as well as you can filter by specific system types. So if you wanted to look at only your losses, you could click checked losses. That's going to pull in your losses, and then you'll be able to flip over into the gallery view and look at what commonalities all of your losers have versus all of your winners. And if you just take some time overall, taking notes about what caused your winners and what caused your losers, the goal is to slowly improve your winning rate over time, and you'll know exactly where you actually stand before putting any money into the market at all. So when you're starting off with this sort of process on bar replay, you can just stick with an even amount. So whether it's $1,000 or $100 of risk, that's still going to constitute as plus, for example, 3 units of risk on winners or -1 unit of risk on losers. And so each time you take one of these bar replay trades, you can just add a little text box and just go -1R if you lose, or plus however many risk units you made when you win, right? So if you don't want to consider the money, you can just input, like I said, units of risk here, and that's going to show you your net unit of risk over your testing. And the reason this is important is because you have to figure out where you want to start as far as money-wise based on your performance. So say, for example, your total goal is to make $5,000 in a month. Instead of looking at how much money you'd have to make per day, all you should be doing is taking that $5,000 of your goal and dividing it by the average amount of risk factors, which would in this case be 15, which is going to give you in turn how much money you need to risk on each individual trade, regardless of how many you take in a day, how many consecutive losses or wins that you have. So the only thing that you're focusing on is adhering to that process that you built, which you know if you risk that much on average per trade will give you your desired result at the end. It will allow you to scale to the levels that you want. Okay, and this is exactly what we reinforce to our premium members so that they can focus on this system-based approach. You can see Mick, for example, he's already made a return on investment on his learning in the second week of trading. Once again, Ned Narb making 108% on his account in a week. Okay, a big shout out to this member who was able to start with $1,500 using the education to get to $10,000 within his first 6 months, and is now able to work part-time and made over $50,000 with the strategies that he's learned following these frameworks that we teach to the private side of our team. So I wanted to make this video to show you guys the boiled down framework. It's going to get you to your income goals quicker and hopefully not getting stuck in the abyss of confusion. Okay, I have tons more custom indicators, trade tools, and other resources that I want to share with you guys. If you want access to those, go in the description of this video, follow my Instagram and DM me the word tools, and I'll have those resources automatically sent over to you guys. Take advantage of our free Discord as well. Watch some of these videos if you want to learn a little bit more about the systems in specific. If you like this video and you want to know when I drop new ones, make sure you subscribe and like the video. But until next time, I will see you all in the next video.